You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what your portfolio is up to? What the options are up to? What the VIX is up to? Let's find out together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you are joining this program right now. If you like what you're hearing, keep those reviews coming so new folks can continue to discover this content across a broad array of outlets out there. And, of course, if you have a question or comment, hit us up. We do love to hear from you guys out there as well. Just don't put their questions in the review portions. They tend not to get to us as quickly as you might like. And let's see who we're going to hear from today. First, let's head on out to the quiet, the tranquil, the peaceful hamlet known as St. Charles, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here. The Option Block is a flower of light in a society of darkness these days. We're the good guys, folks. It's a great show.
Flower of light. I like it. Uncle Mike getting a little flowery over there, which it's usually my job on this show here, but I'll allow it here today because it's kind of fun. And that frenzy of typing means we're joined by a frenzy of option pitters. Looks like we got double duty on the option pit front. First, let's go out to the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program, sir.
Great to be here. Great to be here on this lovely and sunny market crazy day. Let's just call it a market crazy day. Schizophrenia day.
It is a weird one. It is a weird one indeed. And also joining us to help us parse the madness, the frenzied Austonian himself. Is that what they're called? I don't know. I guess we'll find out. The greasiest of meatballs, Mr. Mark Sebastian, also from OptionPit.com by way of Carmen Line Capital. Mr. Soon-to-be Austonian, how are things, sir? Typed like a frenzied person, and then we lost him. Mr. Meatball, are you there, sir? He's there. He's listening. In the meantime, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up the tape, and there's a lot to parse out there, listeners. The market's taking it on the chin for the most part. Again, it depends kind of where you look, where you hang your hat, what is going on in your major index out there, but most of them showing a lot of red on the screen. We're seeing Dow feeling a nice drubbing, off about 0.75%. S&P off about 1/3%. And we're seeing NASDAQ bucking the trend. Tech-heavy NASDAQ feeling the joy, feeling the optimism, up about 1/3%. No love for the small caps, though, today, off about 0.5% out there in IWM land. We'll get to more small cap fun later on TWIFO. Gold and crude also taking a bit of a break. WTI threatening that 40 handle to the dark side, about 40.09 or so right now. So threatening to break it yet again, off about a point and change today. And gold, of course, flirting around those record high levels, coming off a little bit today, off to about 1943 or so. Again, we'll get to more of that fun in a little bit. And our old friend, the VIX cash is floating around, about a 25.5. Let's see, that puts it was at about 26.25, which puts it up about 0.75 point from our last show, but it's given most of that up since pretty much right before the show. So now it's at 25.5, which means it's exactly unched from where it was this time last show. Our old friend VVIX, 117.5, up a little bit. Still flirting around that 120 level out there, up about almost 2 points out there. And our old friend VXX coming into showtime was also literally unched at 29.9, which puts it exactly even with where it was last show. Of course, it has given some of that back as well now as the show has kicked off. It's down to about 29.25, puts it down not quite 0.75 point from last show. So interesting times we find ourselves in. What's causing most of this red out there? Well, the numbers out there, I think, to put it mildly, they ain't good. Everyone expected Q2 was going to be pretty disastrous, and now the numbers are in, and it turns out, it was pretty disastrous by just about any measure. The economy turned in its worst performance ever in a second quarter out there, as pretty much states were shutting down across the board. Our economy contracting at a record 32.9% for that Q2 period. Now, if you want a bit of a ray of sunshine, I guess you can look at this and say economists had forecast 34.8%. So I guess not as bad, but they call it the dismal science for a reason, because they're pretty much never right. So that's pretty bad. Of course, we saw only a 5%, a mere 5% slide in Q1. Of course, Q1 wasn't really impacted dramatically until the latter portion of that quarter. So Q2 was really the first quarter we saw that had the full quarter feeling the impact of all things COVID out there. Now, just to kind of emphasize that dismal science bit out there, different economists having different prognostications for what's going to happen going forward. You got one guy here, the chief economist of Bank of the West, everyone's favorite bank. He estimates the economy is going to rebound, grow an annual rate of 17.3% in the third quarter and about 5% in the fourth quarter. Again, assuming Congress passes all these trillions of dollars worth of stimulus. Others coming on the dark side, Barclays saying the output won't return to its pre-pandemic level until early 2022. And Moody's says not until 2023. So it kind of depends where you're looking on the economic front, what your outlook is out there. But either way, most of it not good unless you're this Bank of the West guy, which thinks everything's going to be hunky-dory in a few weeks' time out here. A lot to parse. Let's kick it off. Let's go back around the horn of the way we came. Let's start with Mr. Rock Lobster. It turns out, Mr. Rock Lobster, that wasn't Mr. Meatball. That was everyone's favorite guest host, the Valentino Meatball, sir, who was grabbing his dad's phone, it sounds like.
I think the working from home, after I saw Zuckerberg show the congressman how to barbecue, which I thought was probably one of the most amazing congressional testimonies in history. Like, that room has decided more major things, but having Zuckerberg tell the congressman that there's nothing like going and hunting your own boar or catching your own fish and putting it on your barbecue, you can't make that up. How awesome that was.
That spoke to you. That resonated to you, huh?
That I'm like, wow. Like, some guy's probably living in a $30 million house on the top of Nob Hill in San Francisco or Pacific Heights. And he's got his backyard green egg and smoker. And he's saying, hey, what are you doing, Congress? Come investigate. Like, what? Clearly, he was not very worried about his testimony. Bezos was eating a potato chip. I mean, like, Are these guys serious? I know Congress is supposed to move slow, and it's a deliberate body, and it takes forever to get things done. And the founding fathers set it up that way. But I swear to God, the perp walk, there's no value to the perp walk for Congress if the guys can't be in the room. You know,
they can't shame. They can't shame effectively remotely.
Not even close, because like you can hit the button. Wait a minute, my internet connection's going out. Internet connection's going out. Even though I'm the CEO of Google, sorry, bad internet connection, going out. So I have to say, it's probably the first shot over the bow. It'll take years because we have laws and courts, and those companies have endless dollars. So it's always all the stupidest thing pretty much I've ever seen. So can Valentino pick up Mark's phone and hop in on the option block? I think the bar has been set by Mr. Zuckerberg as far as dialing it in.
Yes, he did quite literally phone it in out there. So aside from virtual testimony, what else was lighting up your tape this week, sir?
Well, okay, so Volman had tweeted out that inflection point at about 24 VIX, which is the bottom of zone 4. Fourth time since in the COVID era, I would call it, that we closed in the 24 handle for VIX, and we bounced off it like a rubber biscuit. And it's mostly just, because this vol has, when the market's moving around, vol is higher. And, when you have over 1.5% per month per day, that generally is 24 vol, back of the envelope calculation. So that it tends to be like the danger zone, which is what we're still in, is, that's kind of a sentiment. So today we had like kind of a moonshot this morning, 30%, 35% drop. When I heard that, and I think Trump's re-election campaign, kind of tough to spin that one. No matter how you do it, he's going to be hung with the worst quarter in 50 years or something, I'm sure, or maybe ever, I think, for sure, forever. It's not like he hasn't bounced back from catastrophes before, but it's definitely not a good one. And all of a sudden, I think we're down 1.5%. Everybody's like, and they bought it all the way back again. I mean, I'm not going to be surprised if we have SPY down today, SPX down today, and VIX cash down by the end of today. That would not surprise me in the least right now. So it's just a sign of what we have. And as far as it goes, it's hard to, we're at an inflection point. We can't break through it. And I will be surprised at this point, really, if we really do. Personally, it'd be great for me if it happens, but from a vol point of view, we keep kind of hitting this level and bouncing right off it again. And I think this is TOSAW's pain in the butt level as well. For me, it's 24 for VIX, and for TOSAW, like, okay, do I start selling some put spreads again because the market's actually up on the year? And I think we keep dangling on this, and I think we're now officially up for the year, or hovering right around that number. So it's like, are we, aren't we? And we just keep bouncing off this level. So I think it's definitely the reality of the situation hit, but it only bothered people for about 1 hour. That was it, realistically, 1 hour.
Yeah, it does seem like I said it before, this bull has an amazing ability to shrug off even the most cataclysmic of news, which this certainly would fall under. Of course, if you look at rays of light, I suppose you want to look at glass half full. You can say the latter portion of the quarter, things started coming back, but because states were reopening again. But of course, we all know how that's looking now. The states that were reopening are now the hardest hit with COVID. So it's kind of hard to argue that that growth or that mitigating of the sell-off there, the disaster of the GDP is going to continue. But hey, maybe. I guess it depends what kind of rosy outlook you look at the market through. I'm not talking about rosy outlook. I'm talking about Uncle Mike. But of course, Mr. Uncle Mike, my birdies have told me that perhaps this is a somber day for you? Because now today, the true impact of COVID has hit home for you today. Is that correct, sir?
I got to be honest. Yesterday, so I'm a part-time coach at a local college in the area, and so I coached high school football for many years. But high school football is one of the most special things of all of America, and so Division III small and junior college football was basically put off till spring a while ago. So I've dealt with that, but there's something about high school football that brings communities together, it brings people together, and it's just a very special part of America. And so it just ripped my heart out yesterday when Pritzker took it away. Now, I understand he's doing it for safety, but it doesn't make it any easier. So with that, it is kind of a somber time in that regard. And so, but with that being said, if it helps people stay alive, then hey, that's fine. But nonetheless, it's still not pleasant to know that on Friday nights this fall that all the young athletes out there are not going to get to enjoy football. But that's life. But in terms of how the market is doing and where we're looking at on things, I think that the big news right now, along with Zuckerberg's barbecuing, would be along the lines of just the negotiations that are going on in Congress right now for either extending the jobless claims, which end tomorrow, or putting out another stimulus check of another $3,000 or whatever, or $1,200 or whatever per individual, $3,000 if you got a family of four, or whatever the case may be. And so what's happening right now is, in case you guys aren't, or in case just to fill in our listeners, is that if you file for unemployment, you usually get a state benefit, and usually it's going to be between $100 and $400 a week, depending on how much you were making, your ability to work. It's a variety of functions. However, in what the federal government was doing as of a few months ago is they were adding a $600 kicker to it. So even if you only qualified for, let's say you only worked part-time or you didn't make a lot of money, let's say that you only were going to qualify normally for maybe $250 a week, well, then all of a sudden you're making $850 a week just because of this automatic $600 bonus that you're getting, then a lot of people were getting raises because of the unemployment benefit expansion. And that expires tomorrow. So with that, what that means is that there's going to be a lot of people out there that are all of a sudden going to get their government checks taken away from them. And that might not bode well for the economy immediately, because people don't have the money to go out and buy a pair of shoes, or they don't have the money to do those things from the standpoint of the consumer. Now, with that being said, you have it so that there is both Democrats and Republicans want to give some type of money out to the people right now. It's just the classic debate of whose way is right. Fox News will say, oh, Trump, major victory, and CNN, oh, that evil Trump, and that's just how it's going to be on the mainstream media. But with that, the motivation for the Democrats to send out money to people, they like sending out money to people, so they can't resist doing certain things like that. But now what's interesting is that the Republicans want to do it too, because if we have a doom and gloom economy and markets crash, then the Republicans won't get reelected that are already in office, and they don't like that. So with that, I think the issue now is not necessarily if we're going to get some type of stimulus or some type of unemployment extension or whatever the case may be. I just think it's going to be how much. And so I think the market knows that for those reasons. And it's going to be interesting to see how this plays out. Now, the other thing is that there's also the mail-in election issue. They don't really want that, or the Republicans don't really want that, so to speak. Now, I know Trump's pushing now to get the election day pushed back a little bit. And so there's a lot going on with that as well. So we have a lot of political uncertainty. And what it's led to in the market, in the stock market, over the course of the last, I'm just looking at my chart here, since probably about early June, we've just kind of been tinkering around the 300 to the 320 level. And since probably about the last 2 weeks or so, we've been tinkering around the 320 level with SPY. And so I think the market's trying to make up its mind in terms of, oh, okay, well, maybe we have a vaccine coming, or, well, we're going to, even if we don't have a vaccine coming, then maybe we're going to get more stimulus checks until we actually do have a vaccine. So there's really no reason for it to go down. But on the flip side, because of the fact that we are in a global pandemic, we do have trade wars going on with China, we do have a lot of political uncertainty. There's really not a lot of reason for it to go up either. So I'm with Andrew in that this level right now is a giant pain in the butt for me, in that when the market's higher, I want to be in, I want to be doing stuff. But when the market is negative on the year, then I really got to pull in my horns. So that's kind of where we're at right now. We do have Apple earnings after the bell today, so that is going to be fun to watch as always. And aside from the GDP not being what everybody wanted, that's what's going on, and let's lighten up my tape.
All right, let's see what's lighting up the markets out here today. Coming into this portion of the trading block, we're seeing a decent paper on the tape. Not a ton, but not terrible either. VIX flirting with about half of its ADV as of a few minutes ago. About 163,000 contracts on the tape. The ADV, 335,000 out there. So once again, threatening that 300K level to the dark side there. Let's see if we could break through there. Hopefully not. That means we're in a very quiet period again out there in the market. SPY at about 2.15 million as of a few minutes ago. The ADV just a tick under 4 million out there. So SPY getting a little lighter out there as well. The S, 443,000 contracts. The ADV, 963 out there. The Qs, 848,000 contracts. The Qs lighten it up. That's not surprising. They're bucking the trend out there today. So they're closing in on 1 million contracts already. And the ADV is about 1.05 million out there. So the Qs feeling the lift out there. The IWM, not so much. 285,000 contracts. The ADV, 525 out there. Let's go out to our top 10 out there. See what's hot. Cost you 100. Actually, before we go to the number 10, and tell you what it costs to break in, let's add an addendum. Let's add a number 11, because we're going to get to this name in a little bit, because a lot of you probably have been looking at this one of late. It's our old friend Kodak. Circled the drain not too long ago. Now it's back. It's number 11 on our top 10 today. Just a tick under Facebook at 170,000 contracts on the tape for Kodak. But that ain't enough to do it. That doesn't break into the top 10. That cost you 174,000 to break into the top 10 today. That's Facebook. Number 9, UPS in the top 10, $1.76 on the tape. Number 8 and number 7, we got the Twins back. Number 8, Boeing across the street, $1.82 on the tape. Number 7, Bank of America, the ticker Twins, BAC at 185,000. It's so funny how they always line up together, or very usually at least. Number 6, all the way down number 6, we find Tesla, 186,000 contracts. Number 5, PayPal, fighting its way back into the top 10 over there, 211,000. Number 4, perennial top 10er Microsoft, 219,000. Number 3, Apple, 309,000. Pretty much most of the names that testified this week are all in the top 10. Number 2, Qualcomm. Qualcomm back up there, 313,000. Number 1 with a bullet this week, AMD, on fire, 539,000 contracts. The most biased paper is in Qualcomm, 77% of that to the calls. Actually, I take it back. UPS, 78% on the call side. Even though Kodak looking pretty bad there, 70% in the dark side, the puts. We'll get to that in a little bit. First, let's break down what the heck is popping off this week. A whole heck of a lot of stuff. Let's just get to some of the names we got here. Again, earnings move results, earnings season reports, all new, all freshly updated for you over there. TheOptionsInsider.com is the place to go. Lots of names popping off. Let's start with the big one you guys like to look at. The old APPLs out here. They're popping off today. As of this report, which is hot off the presses, they were at 380.16. In the past, they've moved $15.22. Right now, they're pricing in $14.67. So a little light on the Apple front. Kind of interesting. Amazon at 3,033. Say that with a straight face. 3,033.53 for Amazon, to be precise. In the past, they've moved $141.71 in aggregate across their earnings in this quarter. And right now, they're pricing in 168.5. So more juice on Amazon. Perhaps not surprising. They've been one of the big movers of this post-pandemic, or I should say during pandemic era. EA, Electronic Arts, 135.93 as of this morning. They were pricing on the past they moved $6.30, and they're pricing in $6.81. A little bit of extra juice on the gaming front out there. Facebook, they had to, of course, delay their earnings. Now they're popping off today as well. $233.29. In the past, they've moved $13.44. Right now, they're pricing in actually a little bit light, $13.21. So all the headwinds against Facebook, all the drama, all the controversy, and they're pricing in less volatility. That's probably a little bit surprising. Gilead, a lot of you have asked about Gilead out here. Gilead, $73.01 as of the time of this report. In the past, they've moved $2.14. Right now, they're pricing in $2.55, double. So a little bit of extra juice out there in Gilead, but perhaps not as much as you might assume. The Googs, the Goog twins. Let's go to the GOOGL, a.k.a. Alphabet. $15.23.5 as of this report. In the past, they've moved $69.25. And right now, they're pricing in $67.14. So pretty light from a straddle perspective. That works for the mothership Goog as well. Both of them pricing in light vol. Let's get a front away from tech a little bit. Let's go out to another crazy name, WWE. It's had all sorts of weird movement during this pandemic era. They're after the bell today as well. Today is a big day, listeners. $44.50 as of this report. In the past, they've moved $3.35. Right now, they're pricing in $4.73. That's kind of rich. So maybe some juice to be found in them. There are COVID hills of WWE, listeners. CBOE, they of VIX fame / infamy. $89.14 as of this report. In the past, they moved $1.75. Right now, $2.57. So a little bit juice out there in CBOE lands. There's been some kind of, shall we say, stark articles about CBOE and their VIX complex of late. So maybe getting a little bit of heat out there for VIX. Certainly not perhaps delivering on the volume perspective that a lot of people maybe expected, given that. But of course, we talked about this on Vol Views. So probably talk about it again tomorrow, why these levels of vol maybe haven't been the best for VIX volume overall. And we see it, of course, reflected in the ADV I just talked about a few minutes ago as well. Qualcomm, our newcomer here to the top 10 again, $93.03 as of this report. Let's see. Oh, this is our result reports. These guys already popped off. They popped off yesterday after the bell here, and they were pricing in 5.4%. They've delivered 13%. So Qualcomm knocking it out of the park here. Lilly, of course, on the drug manufacturing side, 161.75. They were pricing in 4.4%. And they actually moved 6.6%. So a little bit extra juice out there. P&G, let's go out to them as well. They were, before the bell today, 128.31 in the past. Oh, excuse me. They were pricing in 2.6%. Right now, they actually delivered 2.3%. This is, again, as of the time of the reports. This is just a snapshot. They could have moved more since then, which would mitigate this somewhat. But right now, as of the time of this report, you got to cut it off somewhere. And as of the cutoff, not making the grade. PayPal after the bell yesterday, 184.60 was where they went out. Let's see, they were pricing in 6.4%, and in the past today, as of this report, they've moved 4.2%. So light vol over there as well. Let's see, let's do one more. MasterCard, let's get out to payments land. That's obviously a interesting one right now. 309.30 as of they right before their earnings. They were on before the bell. Today, actually. So they closed last night, 309.30. They were pricing in about 3%. They delivered about half of that, 1.4%. So light vol for MasterCard as well. So far, the season is shaping up kind of light, 59% for week 1, 53% for week 2, which is anemic. Again, a lot of names haven't reported yet. So that means 100%, of course, would be everything performing in line with the straddles. 53% means roughly half of the vol they priced in has been exhibited as terms of movement in the marketplace. That's crazy light, but again, we haven't seen the rest of the numbers yet. Historically, these first 2 weeks, though, look like they are pretty light. Historically, they've averaged a little bit lighter than 100% in the past. You can see all this for yourselves and a lot more, listeners. TheOptionsInsider.com. Meanwhile, we got to get rolling into our next segment. It is time to go into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. We actually have some user requests coming in for the Odd Block today in terms of names you guys want to see. One of them, of course, has been dominating a lot of the tickers this week. It's Kodak. We had this one. We talked about the death spiral, this one on our show. Doesn't seem like that long ago. It was quite a while ago when they filed for Chapter 11. Of course, the days of film, perhaps not so much. Seemed like they had pivoted once already to try to go the crypto route. And apparently now they have pivoted again because of the Trump administration announcing earlier this week through the Defense Production Act that they are now a pharmaceutical producer. Bam! Just like that. And the shares jumped wildly on the news on Tuesday, over 200%, up 318%. Eventually, they triggered 20 circuit breakers to the upside on the NYSE. So they were halted 20 times throughout the day, up 650% at the top of that apex out there. And now net on the week, they're up over 1,600%. So a crazy week for Kodak. If you weren't watching the madness, listeners, they were at up 254 on Monday. And then by Tuesday, they were trading $8. And then Wednesday, the guy really took off, 43.5. They're at 35.96 right now. So a lot of craziness here. A lot of you guys were chiming in about this one. We'll just bump you up from our mail block here. First off, we have On Solid saying, yeah, baby, we now have weeklies to sell about Kodak. So there you go. More options, pun intended, always a good thing. Sebastian, not the meatball, maybe it's the crab, saying some traders may have a sore butt from yesterday, to put it in the family-friendly vernacular out there. And we've got the alerter chiming in saying, and someone's being investigated for insider trading when it comes to Kodak. And that's a lot of people chimed in with that, saying, hey, did you see anything weird on Kodak leading into this announcement? So we thought we'd kick off our odd block looking at Kodak. Like I mentioned at the top of the show, they are actually number 11 right now as of today's activity. But a lot of that activity is fading at 70% of that 170,000 contracts coming on the put side out there. So folks, not feeling the continued effervescence for this upside out here. Let's parse it a little bit. Let's dial the Wayback Machine back to Monday, because that's when, if you're going to see this paper come in and this quote-unquote pick-off paper, the people who know something, and as someone who's been on the other side of a lot of these trades, you can usually spot the signs of this stuff. That's where you probably would expect to see it start coming in, especially when the stock was $2 and change. You could score some options for some pretty decent, juicy levels. And it doesn't seem like there was a ton of paper that would qualify in my category, first glimpse as, crazy pickoff paper on Monday. In fact, the biggest print was actually looks like paper selling the 2.5 puts 250 times. So we're not talking big prints, and also overall not a lot of volume either. In fact, there were looks like some interesting call scoops. I guess you can call them well-timed because they made some money. The OC5 calls got scooped, a couple of 100 lots of those, 100 lots each for 14 and 13 cents. Those are winners. Those are about $350,000 winners for each of those. So you're talking about $700,000 on both of those. So I guess you could say someone scooped those. Why are they coming in and buying the OC5s? But you're not probably going to see the regulars come in to check in on 100 lots for 14 cents. Maybe you will. Even the net activity, everything else was a lot smaller, 60 lots and smaller. And even the net activity, the most active contract on Monday was 651 of the 2.5 calls in August. And then 312 of the AUG 2.5 puts. So if you think the thing's going to explode, you're probably not going to be selling puts. If you do, you're not doing it right. You should be buying calls at that front. If you got that info, if you're ahead of the curve that much, you should be scooping all the calls you can. And then we got 200 lots of the 200 total of the OCT5 calls. So 236 of those total, including those two big 100 lot prints. So didn't seem like there was a heck of a lot of what I would call quote unquote pick-off paper out here. And then on Tuesday, that was one of the big move days. The biggest prints again were on the put side. The AUG 2.5 puts lighting it up quite a bit out there. So kind of weird stuff. That's something else I think that CNBC was picking up on that as well. The 2.5 puts they were talking about on Tuesday, they say traded over 100 times for around 10 cents. So it seemed like some of the biggest prints were kind of fading this thing out here, which is kind of weird. So I didn't see a lot of stuff, Mr. Rock Lobster, that would qualify to me as, hey, someone knew about this. As someone who's been on the freaking business end of these things before, they're usually not that shy. They come in and say, okay, how are these calls? I want 10,000 of them. It's not this degree of subtlety. Would you concur, Mr. Rock Lobster?
Yeah, I think this just surprised everybody. I mean, if you have, okay, so when you went to bed, a couple of nights ago, you're like, all right, what's the thing I think that's most likely to happen? Eastman Kodak is going to become a drug supplier in the United States. So, I mean, I thought they made chemicals, like photo processing chemicals and stuff. So I think they're not totally. They do make stuff, but I think part of the agenda is to get some jobs and drug making back in the U.S. So, is this in this administration kickstarting? Who knows? But anyway, as far as this goes, yeah, there wasn't like the 50, 60, 70,000 contracts, going into this. So I think it was kept amazingly quiet. But another thing too is the market cap. So the market cap is now 1.45 billion. Actually, given the amount of money they just got, the loan they got, I don't even think the price is unreasonable where it is right now. Even though it was nothing, but it's a pretty good. It was a pretty good infusion of cash, let's say.
Yeah, so this is a rare one where it seems like the information was kept pretty tight. No White House staffers or their grandmothers or anyone at Kodak was out there scooping all of this stuff, which is what you would expect for a move of this magnitude. You expect some sort of information leakage. That's usually reflected in the options. And obviously someone made about $700,000, so maybe someone should dig into those who scooped those OC5s, because that's sitting pretty. But outside of that, not a heck of a lot that I could point to say, oh, this is it. This is naughty. This is naughty business out here. Let's see. Oh, now we've got some our CNBC reporting of breaking news. Our producer has given this, that the Kodak CEO admits he bought thousands of shares of the stock. So he made $1.5 million. So he bought the stock, which is why we're not seeing it in the options out here. He bought 46,737 shares for $222. Yes, that's kind of dumb. If you're the CEO, that's kind of stuff that's just absurd. That's going to get you thrown in jail. But the people, the information leakage people who know better and would use the options to do this, as opposed to this sounds like idiotic CEO. Because the first guy you're going to look at is the CEO on this, so that's probably foolish. But yeah, the options are not holding up with that sort of similar size out here. Since we got a lot of requests, let's do another request here. This comes from bump another person up from the mail block. This comes from Sub Chan. Sub Chan says, "Hi." Well, hello, Sub Chan. Any options activity in Gilead coming out? They said they have earnings popping off today. So yeah, we looked for you coming into today's numbers here for Gilead, and kind of the same deal. As of, a little while ago, their ADV was about 48,000 contracts a day, so it's pretty robust. And they hadn't even hit that as of a little bit ago. They were about 36,000 contracts as of the start of maybe a little bit before the start of the odd block here. In terms of activity today, not a ton. There was about a 900 lot of these AUG 69 puts going up. Paper buying those. By the way, let's get a print here on Gilead so we could see for sure. Gilead right now, GILD, of course, is the ticker, listeners. About $72, off about $1, so about 1.5% today. So these 69 puts, someone's scooping these up for $1.13. These are going out in August, so they got a month or so, 3 weeks at least to go out here. And then we got the AUG 68 puts, 500, a lot of those, kind of mid-market. So it looks like a lot of puts. Usually in these kind of drug-related names ahead of earnings, we see a surfeit of calls, and not the case. Got a 500 lot of the SEP 70 calls going up there for $420. That's pretty meaty out there. But other than that, those are $2 in the money now. So, but outside of that, not a ton. Looking at the OI, the biggest OI right now, Sub Chan, are the August 120 calls. 32,740 of those bad boys are on. Then it drops a bit, 23,000 of the AUG 80 calls. So paper that is really not even relevant anymore here compared to what we've seen out here. Let's see, how high did it get on the year for Gilead? It got up to only 85.97. So 120 calls That's a fair bit optimistic, I think, to put it mildly. Of course, there was a lot of optimism on them in the early days of the corona. Were they going to actually come out? Was this remdesivir going to be the magic bullet out here? It seems like it might be decent, but maybe not the magic bullet people were hoping for. Whoever was on that 120 strike for size certainly was thinking that, because those have not that much longer to go, and doesn't seem like we're going to get there anytime soon. Over 50% rally in the stock by then. That would be pretty impressive. Then we got 21,000 of the SEP 75 calls. Those seem a little bit more realistic out here. So yeah, spoiler alert right now. I hate to be 2 for 2 here with our listener requests, but spoiler alert, Mr. Rocklobster, doesn't seem like there's a ton lighting it up today in Gilead or even open out there. That seems extremely interesting outside of that very optimistic AUG 120s. Would you concur, sir?
I do. And you know what? This is one of the stocks, like every stock that has been even remotely related to COVID has done pretty well, but Gilead just, it kind of dies on the vine. And I'm looking at, okay, is it because of like the drug deal that Trump signed, but remdesivir actually, helps with COVID. So you would think they'd have some growth there, but they're not really charging a lot for it. Anyway, it's definitely it feels like it's a stock that's beaten with the ugly stick a little bit. So I'm looking at it. I own a little bit of it for like mid-60s, and I don't know. I haven't decided what I want to do here by the end of the day. If I want to, either add some long calls or just sell some puts like farther out of the money, like mid-60s in January. Because I'm a little bit, I have to say, a little like TOSAW, like not quite sure what I want to do with them. So I'm in the ambivalent zone on the stock, to be honest. I just thought, but I mean, it trades at like a 0 multiple as it is right now. So I don't even know if the earnings matter anymore, to be honest. Because they make such a ton of money, but nobody cares. So very blasé paper, it's what it is. And I think the stock's been a blasé stock.
We'll see if we can bust out of the blasé rut here with, let's see. We got our choice of some other ones here. Do you want a call, roll, line in the sand put, or do you want a Wayback Machine, Mr. Rock Lobster, for our final victim? You pick.
I think the time is for line in the sand put.
All right, let's do it then. It looks like it anyway. Let's go out to Equitable Holdings out here. The call roll, listeners, was in IDEX. That's his, Ideanomics. That's a sub $2 stock, so maybe not the most scintillating of ones. Hopefully the Viceroy not listening to that one. Let's go out to Equitable Holdings instead. This one has been on, but it's been a little while, I think, since we've chatted about good old Equitable Holdings. Ticker symbol EQH. Out here trading right now $20.15, off about $0.50, so about 2.5% out here. A year ago, this thing was trading $22.78, so not that far north of where it is right now. And it kind of vacillated at those levels, but with the general uptrend, so it kind of slowly moved its way up to about 26 and change, almost actually a little bit north of 27, right before the sell-off there in February. And then it kind of hit the nadir, got all the way down to $9 and change, $9.89 in the madness of March. But it kind of recovered pretty quickly. It was up to 15, almost 16 again by the end of March. So kind of bounced back pretty hard. But like a lot of names, it had fits and starts. Then it sold off again, 13 and change, back up to 16, back down to 14, all the way up to 19, then back down again to, let's see, how low did it get? 15 and change. Did that a number of times before it peaked out again. I'm going to guess June 8th. Yes, June 8th. That's the day for all of our names out here. June 8th, 23.05 is where it hit. And then it's kind of never looked back from there. It's kind of been lower. Got down to 19, actually 18 and change back at the end of June. It's kind of been hovering in this high teens, low 20s level pretty much ever since, to where we find ourselves today. What is our Eye of Sauron looking at? It found the AUG 17.5 puts going up for 22 cents, 4,500 times over there on the CBOE. This is a quality market, Mr. Rock Lobster. These puts were no bid at 40 cents. So no liquidity provider was willing to show any bid, not even a nickel bid, for these things anywhere. There were no bid at 40 cents. I will go out on a limb and say that's a terrible freaking market. But hey, that's the times we find ourselves in. Liquidity providers kind of stressed, busy with other things, not too worried about EQH out of the money puts Clearly. So no bid at 40 cents. Where did our options go up? They went up for 22 cents. So technically, that is toward the ask portion of of this ridiculous market. It's kind of a bit of a coin flip as to what the hell they were actually up to. Worth noting, there are earnings in this cycle. The next earnings announcement is on August 4th. So, Mr. Rock Lobster, you can look at this two different ways. You can look at this and say, I think someone was managed. That'd be a pretty decent amount of juice on a no bid put if they got 22 cents out of it. So if they were selling it, they could be saying, hey, I'm drawing this line in the sand this far, no farther, and I'm getting 22 cents to do it, which is nice. Or you could also say that offer was ridiculous and they got a much more reasonable price to buy it, and they're concerned about earnings, and so they're hedging through the earnings cycle and willing to pay 22 cents to stop themselves out at 17.5 level. Which way do you fall on this head scratcher, Mr. Rock Lobster?
I have to say, we have talked about this one, and this is, I believe this is one of those. I think this is AXA. It's insurance. I don't know why they hate this stock so much, but man, they sure do. I think for somebody that wants to be a long-term holder, collecting 1%, I think you're doing a little better than the dividend. The dividend is pretty decent. It's 17 cents. It's going to be paid on the 28th. You could double dip on the divvy and try to get 2% return to the middle of August. I mean, crazy market. They put up some decent numbers. I think line in the sand put. I think that the stock traded up below 20 for a little bit today, and somebody took that opportunity and said, hey, you know what? I'm looking for a bargain. I mean, it's showing they're showing book values like in the $40 range. You never know with book value with insurance companies. It's kind of like who knows what it's all worth. But anyway, they do a lot of retirement stuff. It looks like a very, very inexpensive company that pays a pretty decent dividend, and like a long-term holding. That's all. So I think as line in the sand put is pretty, any line in the sand that pays 1% or better per month, I think that's reasonable, right? Because you're buying the stock well below the market. You're still looking for a yield, but your goal is to buy the stock ultimately, and you got to be happy with that.
Yeah, I'm just impressed that they got 22 cents when they were showing no bid. That's an impressive sale.
Surprise.
Oh, we're not going to pay anything for these. Oh, okay, twist my arm. I paid 22 cents. That just shows that's the markets we're getting right now, listeners, as we head on into hopefully your questions are better. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, buddy, welcome to the Mail Block. A lot of you guys chiming in on a lot of different segments. We already featured a couple of you in the Odd Block, so a little bit of a listener-directed Odd Block there. Hopefully you enjoyed that. Oh, so many different things you guys are commenting on. 151, this man's a genius. True genius. He says, McDonald's commenting on their revenue falling 30%. He says, they shouldn't have gotten rid of the all-day breakfast. And yes, I'm with you completely, 151. That was their best move in decades, and now they've gotten rid of it in this pandemic. Granted, I haven't been to McDonald's in a while, but if I would, I probably would go for breakfast. So getting rid of that, on top of Uncle Mike losing his beloved high school football, losing the all-day breakfast at McDonald's, now we see the true price of Corona. Outside of the horrible, catastrophic toll we've seen already in the economy and certainly in the lives lost, now we're seeing the ancillary impact that are horrible. And that, of course, all-day breakfast going the way of the dodo. Hopefully, saner heads will prevail over there, 151, and they will bring this back out there. Mr. Uncle Mike, I know high school football loss was a big one for you. Does this sting equally as much to you, sir, the loss of all-day breakfast at McDonald's, sir?
Not quite to that level, but I'm with you. If I do go to McDonald's, I typically try and get a breakfast sandwich. I like the sausage, egg, and cheese McGriddle if I'm going to go there. But, I live in the Chicago area. If I want a burger, I'm going to Portillo's.
I gotta say, I don't think I've ever had a Portillo's burger. I think they're known for their Italian beef and their hot dogs. I get that a lot. But I never had a burger at Portillo's. I'll have to go try one. I've had their ribs quite a bit, too. Their ribs are very good. But, and if you don't live in Chicago, listeners, you have no idea what they're talking. So you recommend the burgers at Portillo's, Uncle Mike?
I recommend anything at Portillo's. I even like the water at Portillo's. Everything is so good there.
It is close to us here, so that's one of the few places, and they do have a pretty decent drive-through over there. So that's one of the few places we've been hitting here in the quarantine. A lot of Italian beef and chicken tenders and all sorts of fun. No ribs. I'm not making ribs in the quarantine, so that one hurts a little bit. All right, next up, we got frequent listener Tony Weber chiming in via the live chat. He says, I have another VIX-related question. If SPY drops 10 points in one day and then recovers 10 points in the same day, netting 0, do I use 0 movement or is that a 20? Well, first off, if you use SPY, it's not going to be anything for VIX because VIX, of course, is coming off of SPX. So a little bit of a ticker snafu. Now, if SPX drops 10 points, you got a little bit of a different beast. But Mr. Rock Lobster, ticker kerfuffle aside, let's say if the S drops 10 points in the day and then recovers 10 points, what do you use in your model, sir? Are you going 0 or are you going 20? Explain it to Mr. Tony here.
So is he asking me what do I think the vol is on the, what do you call that, the doji move? It moved but it went nowhere move? Am I answering that question properly? I was trying to figure out what the question is in the question.
I assume so. I think he means what like the net residual vol should be, which of course, if there's movement at the end of the day. You know, net 0 doesn't mean, look at VVIX. Talk about that all the time. That has vol moves, even if there's net nothing on the day. Right. So vol is vol. Movement is movement. And of course, SPY gives you nothing, right, Mr. Rocklaus?
So the thing is, he's saying 10 points, so let's call that 3%, right? 3% intraday move would be like a 48 or 50 vol, okay, just daily, day to day. That's not an annualized, but it's not a 50 vol expected to happen for a year though. It's a 1 day 50 vol move in the very short term. So normally what happened is, what will happen with VIX? It will probably expand a little bit, but it depends where it started. You know, if VIX started at a 40 or a 38, you would get very little net move probably out of it. The front end of volatility would go up. So SPX or SPY, you know, the first weekly options, yeah, that vol might blow to the mid 40s or something like that. But for the most part, so you will get a bump. It depends on where you start. Now, if you started from, let's say, a 12 VIX, by the end of the day, you might see, let's see, the last time I saw that happen, probably you might get to 20 VIX, but the short end vol, like weekly vol, would be probably closer to 35 or 38, at least for a day or two, when you're talking about closing vol. Because remember, the vol will shock in the morning, you're right, you get that big drop, and then as it recovers, the vol compresses again. So that's normal. That's how I would price it if I'm trading it, you know. But that's how that would work.
A lot of people chiming in on our discussion of Kodak. We said, we didn't really find a lot of dubious options activity. Our consumer chiming in saying, check the Form 4 transactions. Significant options acquisition by insiders on Monday before the news. Well, we're checking the volume here, and I'm not sure if I see anything that qualifies my book as, unless they're that savvy and they spread all their volume out around multiple strikes, which again, I've seen a few of these in my day now, and they tend not to do that. They get in, they get out, and they do it for size. But the biggest, most active contract was 600 some odd contracts. I mean, that's not significant in my book. Someone who bought those OC5s is probably happy. He made close to $1 million. So yeah, check out that guy. And if that's someone affiliated with the firm or the deal, they should probably go down. But this guy, Jake Tilley, chiming in on the CEO. Yeah, we saw the CEO, Jake. CEO purchased 47,000 shares on July 3rd. Deal was announced on July 28th. So yeah, I agree with you. That one's shady. But we're talking about the options here. And Sebastian, who commented before about the stock, who have a sore butt, he says, who cares? Who cares? That's the whole point of looking at the options. That's why we do it, is to see if people have some inside info going on. So yeah, I don't know, our consumer. We'll dig in some more, but I'm not sure if I see the quote-unquote significant insider activity, you guys. This one certainly seems like it would be a good candidate for it. but because this is where the big bang for the buck for options comes in. Certainly might have been some in the shares, but not so much in the options. But we'll keep looking as we keep on heading into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, a lot popping off today. If you want to focus on micro, you got your day here. Probably the biggest day of the quarter here in terms of earnings. You got Amazon after the bell. We've got the fruit company after the bell. We got the GOOGLs after the bell. We got Gilead after the bell. WWE, Grubhub, Facebook moving itself to today out there. So just usually the A's names are all together or around each other. But don't have Facebook usually in there. Usually they're a few days separate. Now they're there today as well. So it makes this day even bigger. UPS, and of course tomorrow we've got Exxon Mobil and Under Armour and Pinterest and some other big names. But today, of course, a big name, a lot to sink our teeth into. We'll be crunching all the numbers for you. A lot of it already on the website. More after the fact tomorrow, of course. Options, or I should say earnings move results, and earnings season reports available for you free of charge. TheOptionsInsider.com. Let's go back around the horn. Mr. Uncle Mike, sir, what are you watching for the rest of this week until we can gather here together on Monday?
Definitely watching Apple earnings tonight. Excited about that. And just seeing if market's going to hold and stay positive, and then seeing how this debate goes with the stimulus checks and unemployment extended benefits and all sorts of free government money. So watching a lot of things.
Ooh, free government money. It sounds fun. Film at 11 out here. Tune in. Get your free large amounts of government money. I'm sure that drives the deeply cynical libertarian in you crazy, Mr. Rock Lobster. So what are you watching? What are your thoughts until we can gather here tomorrow on Vol Views and then together on Monday again for the old OB, sir?
The simple thing is, can we break out of the danger zone and stay and close below there? And massive earnings tonight. You know, remember, Apple is trading at the largest multiple it has in a while. Like it's not going to suffer anything from sales. So, and Google, Facebook, and Amazon while they're at it. So we'll see if just everybody basically is just, we're all just pawns of the big four tech companies at this point. So, but I think anything that dropped below 24 vol is significant. And if you need anything for options, go to optionpit.com. We'll be happy to help you. And for that, you guys have a nice weekend.
There you go, Mr. Rock Lobster. Getting ahead of us, a little bit of a plug of his own. That music, of course, means we come to the end of this sojourn. I have a feeling we haven't come to the end of the conversation around Kodak. You guys have your thoughts out there, so we'll keep an eye on that one. I'm sure there'll be more fun paper to parse in the near future. In the meanwhile, you heard him, the Rock Lobster. If you want to learn more about what's cooking over there in the land of the pit, optionpit.com is the place to go. And Mr. Uncle Mike, if folks are intrigued, they want someone to hold their hand in these crazy markets, where should they go? What should they do?
Give me a call. Go to my website, stcharleswealth.com. We'd be more than happy to have a conversation with anyone in terms of financial management, option trading, or Portillo's cheeseburgers.
Portillo's cheeseburgers. That still sounds weird to me. The Italian beef, the hot dogs. My producer's chiming in for their chocolate cake shake, also pretty good. I wouldn't know, being lactose intolerant, but it seems pretty good. Ribs I could vouch for. I've never had a burger over there. So maybe I'll have to mix up my ordering next time. Check it out. Portillo's, listeners, a good place to go. And, of course, Uncle Mike, St. Charles Wealth is a place to go for more information. On behalf of the unklest of Mikes, the rockingest of lobsters, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, sending in your Qs. Hopefully you liked our A's. And we'll see you back here in a little bit for TWIFO, about half an hour. And then back again tomorrow for volatility views. And we kick off the whole shebang again on Monday with more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.